What up, you guys? Sean here, back again. Now, I just want to make this a video about Mohawk Holdings Group Inc. Just get it out the way. This is a company that I purchased, around 2 or 3 months ago when it was around $8.52. It's currently trading at around $16 during this closing. Now, what is this company? It's mainly a holdings company. It basically acquires brands and it takes data and uses the AI to autonomize some of the the day-to-day actions that basically humans would do to make it faster and make it more efficient at meeting market demands. So let me give you an example of this, right? So let's say they acquire a new company, right? It's Joe's, I don't know, Joe's Tables, right? Joe's Workshop Tables, right? And they acquired a company, they put the brand into the business, and everything synchronizes, which they do in a very, very fast pace. I'll get to that later. But everything synchronizes. They got the company in. Now they're gonna use the AI to analyze a conglomerate's worth of data. Like, I don't even know if that's a word. Is that a word? But a whole bunch of data. Just to try to meet their demand, right? So let's say this is a table company. It makes tables. Maybe they're like 5 feet long or something, right? Just a hypothetical. And then you see the data that's being analyzed through Google Trends, through Amazon, what people are searching for, and the reviews and what people are looking for. It's say most people are looking for a table that's 7 feet long, right? That's 7 feet long, and there's very few suppliers or very few business people that are actually supplying this table, right? This is fully hypothetical, right? So what this AI would do is like, hey, I'm seeing a lot of data here that most customers or most consumers are looking for this specific type of table instead of this one that this brand usually sells. We should try to actually move our main or core revenue over to the 7-foot table as opposed to the 5 feet table, and that way they're more nimble. They're actually able to meet the demands of the consumer. Now, this company is a fully e-commerce company, so it owns no brick and mortar. It's an online brand. It mainly operates through Amazon, which most of its sales come through, as well as other retailers like Best Buy and Walmart. But the main one is Amazon, basically. And this company has been growing at a very, very high rate, incredibly high. During the past 2 years, besides from 2019, it's been growing at a rate of 100%. Now, 2019, it dropped down to 50%. I do believe there might be even a slighter decline again because they are focused more on profitability. I wouldn't say it's not expansion. They're still expanding, but they're more focused on stabilizing the company, which is really good because last quarter they had an operating income of $100,000, which is pretty much good. They're going in the right direction, basically. Now, what's my price target for this company? It really varies. It's a growth company. It's very, very hard to predict where growth companies will go. I mean, it's very, very hard. But in my bear case, because it's a really risky stock, I think it might be zero. But that's extreme bear case where the company just fully just goes bankrupt and nothing happens. So that's my extreme bear case. I wouldn't really take that with full importance. My other bear case would be that it grows but not to the levels that it needs to be. So practically like a price target of around $37 to $40 by 2025. And my extreme bull case, or not an extreme bull, let's just say bull case. My bull case will be somewhere around $100, and then my extreme bull case would be around $376. Now, that's assuming if the compound annual growth rate grows at around 35% each year until we reach 2025, which I think that's a very reasonable growth. By then, they would have a revenue of around 829 million and up to $1 billion. And depending on where their price to sales ratio is trading at, because it's very hard to calculate the earnings at this point. So we're just going to do price to sales. It could be between 1, 5, or 10. I believe there's a likely chance it will be around 10, or it could possibly even be greater than 10. Because this company it should actually trade more like a tech stock as opposed to just a regular brick and mortar. because again, it owns no, actual physical stores, so it doesn't have that major overhead, and most of its logistics is actually outsourced, so it doesn't have that overhead either. So it's in a really good position. One thing I'd say I don't like about this company is that it's currently, I guess it's kind of selling its competitive edge, which is Amy, which is the AI that I talked about earlier, which actually, gathers the data and then shows what consumers want in the marketplace. They're kind of selling that as a service. I do believe, and this is my guess and my guess alone, that this is maybe like a scaled down version of it. I don't think they're just going to sell the competitive edge like that. So we might just be looking at a very much like a really scaled down version of Amy that they're selling to other businesses to kind of take full advantage of the abilities and capabilities that Amy has. Now, if that goes successful, that is software, and they're selling software. That's a high margin business, so that can actually contribute a lot down to their bottom line. But that's, I wouldn't say speculation because it's already out there. The tech is already out there. But that's, a really bull case, meaning this trades like higher margins that it currently does, which currently the gross margins is about 47%. Selling tech like that, you can have margins up to 50 to 60%. So it's, it's just out there. But anyway, I hope you guys had some value out of this video. And remember, like and subscribe, and peace out. Also, guys, I forgot to mention the M&A strategy, right? Acquiring brands. So basically why I really like this is because things that usually take up to 4 to 6 months usually could take up to 48 hours for Mohawk. During their last brand that they acquired, I think it was Truio or Trio. I have a very hard time pronouncing the name. It took them a full 48 hours to acquire that brand. Now, it's crazy. It might not be like that for every, brand that they acquire because different businesses, come with different things. But just being around that range, just being like in a couple days or even weeks, you're scaling down 4 to 6 months to that dwindle of a time. They can basically meet a lot of the demands a lot faster than their competitors. Anyway, peace out, like and subscribe, guys.